Warning, this is merely a thought exercise, albeit a very important one, and I'll explain why in this video as we explore. The idea of $55,000 gold is quite insane at this point in time. In fact, honestly, $10,000 gold still sounds pretty crazy, and there have been some that have been calling for that for a long time. But nonetheless, the reason why this is important to talk about is because of discussions that have been occurring over the last year or so about gold revaluation. It's actually been proposed in legislation in the Congress. So it's important to discuss, especially with regards to history. There was an interview that was done by a gentleman I'm going to be referencing here from Kitco about this. And I tell you, it is quite something to think about. And it really kind of has taken me aback, too, when you think about how important gold is to world economies, and especially considering that many nations around the world have been accumulating it and stockpiling it like crazy, breaking 50-year records in the accumulation of gold over the years. We can be our own central bank by accumulating gold as well. The channel sponsor is Summit Metals. I hope you will check them out by clicking on the link in the description below so that you can elevate your wealth with gold. Now, a rare convergence of gold demand from both Eastern and Western economies is fueling a significant rally in the precious metal, and silver is on the cusp of a major move back to its all-time highs as well, according to Tavi Costa, who's the partner and macro strategist at Crescent Capital. He spoke at the PDAC 2025 conference in Toronto, Canada, and he told Kitco News that historical comparisons suggest a dramatic revaluation of gold could be in store. And that's right, it is possible, especially when you look at history. So he's done his research on this. Costa highlighted his firm's recent report, which examines the potential for gold prices to reach extraordinary levels if the United States were to revalue its gold inventory relative to outstanding treasury. That's the important note here, relative to the treasuries that are outstanding. He says, to me, it comes down to the treasury. How much treasuries are outstanding out there? 36 trillion. How much do we own of gold, Costa stated. Of course, a lot of people question that. How much gold do we really have? Do we really have 8,130 tons? It's crazy to think about, but, there's been talk about at least touring gold knocks, but no more talk of that. And it's crazy. I honestly think that Elon Musk and Donald Trump should come back together, at least to do that. Show us the gold. Now, they have not talked about an audit of the Fort Knox gold reserves, but I think that should come next for sure. Currently, the value of U.S. gold reserves is about 2% of those outstanding treasuries, compared to roughly 17% in the 1970s. Think about that. We've not really added any substantial amount of gold for many, many years, but we've got a lot of treasuries, and we're printing a whole lot of money. We're essentially back in another quantitative easing period where we're printing more of these, and you can print these or digitize them ad nauseum, and that's what they're doing back again. You can't print gold, though. You got to mine it. You got to work through it. And, of course, the United States is, at least that we know of, is not adding any more gold to the reserves. And again, many people question if we really have any gold. Now, so if we're going to go back to the 17%, it would take us back to $25,000 an ounce if it's at 17%. But if we go back to 40%, which is what it was back in the 1940s, it would be close to $55,000 an ounce. Now, I'm going to stop right there before I read the next sentence because the amount of gold that we held was not all ours. We had about 20,000 tons of gold back then, mainly holding it for European nations under threat of Germany moving west. So they took all that gold and moved it. In fact, there was a very famous Charles de Gaulle, president of France, who wanted to repatriate a lot of that gold. It was a pretty big deal back at the time. We stored a lot. We still do store a lot of gold. The Federal Reserve stores a lot of gold for foreign countries. But nonetheless, our official holdings are, like I said, 8,133 tons. And so, but this is still pretty significant to think about, $55,000 an ounce. He says, noting that these are not price targets, but serve to illustrate the potential for significant valuation shifts. If we were to go back to that, even if we were to break it down the middle, we're still talking about, $35,000 plus gold. If we were to make that a kind of evaluation, which really would strengthen us up, obviously, but still, that would put quite a hurting. But it just is a good thing to illustrate, and it's so important to understand that, because central banks have been accumulating gold at a 50-year high since the global financial crisis. Now, honestly, they have been adding some gold since the financial crisis, but they really upped their game in 2022 after Russia invaded Ukraine. But still, that does tell us something, what other central banks are doing, and we've not done anything with our gold. In fact, we've not even moved it away from what it was back in the 70s. We value it, according to official holdings, at $42 and 22.22222222 cents, or somewhere around there. It's crazy. So they have been accumulating it. U.S. gold reserves are at their lowest level in 90 years, which is not saying much because we've not added or taken away from those reserves. But this divergence, Cogent suggests, could pressure the U.S. to reconsider its gold policy. Costa also expressed strong concerns about the overvaluation of the U.S. dollar. That's right, this. And that is a good point. Remember, how is it valued? It's measured against other currencies right now. So let's talk about that a little bit. It's stating that it's likely at its peak and its most overvalued level in history versus other currencies. He drew parallels to historic instances of dollar devaluation, such as the Plaza Accord in 1985 and the events of the 1930s. What we do know is that the dollar is at its peak, most likely, and that's the key part of it. So as an investor, you think, what do I do in this scenario? He suggests that a weaker dollar would be a green light to a lot of asset classes that have been ignored for a long time, including emerging markets and natural resources. Now, with silver, he sees it being on the verge of a significant move to its all-time highs. In fact, I tend to agree with that. As I record this video, it has really shot up in price to well over $50 an ounce. Who knows what it'll bring by the time you watch this video, though. Could it continue to climb up or could it fall back? We don't know. But it all is relative to what's going on around the world and supply chains and the like. Positive short-term price action, and he believes derivatives of gold, including silver, are looking very attractive in the near term. It wouldn't surprise me if we see a jump in silver prices to finally close in quarterly high in terms of the candle, with technical analysis terminology there. And so we'll see what happens there. But nonetheless, given his outlook on the dollar and precious metals, Costa recommends rebalancing of investments away from the tech space towards commodities and emerging markets. He pointed to the high valuation of U.S. equities compared to emerging markets. And Costa also observed the significant cash position of investors like Warren Buffett, suggesting a potential redeployment of capital when more attractive valuations emerge. And that is a good point. We can think about that, of having a cash position in hand, not only for opportunities, but in case of emergencies, so you don't have to liquidate your precious metal holdings. So that is pretty important, a designation there and point that he made. But nonetheless, a gold at $55,000 an ounce is not going to happen, I don't think, really ever, but it does give us some insight as to history, what history has shown back in the 40s. But nonetheless, it is quite possible we could see some revaluation to something maybe even above the current market price. Some have suggested that one of the reasons why gold's price has gone up so much is so that we can revalue it, and maybe up higher, with the potential that it would move up higher given today's market conditions and what other central banks are doing around the world. But further strengthen the United States holding and essentially give new hope or new confidence, I guess, in the status of the United States compared to the rest of the world. So it's a very interesting dynamic here, and an interesting thought scenario. I never thought about it in that way. And so therefore, when you look at it in that regard, in that thought exercise, it gives you kind of perspective how out of touch we are with treasuries compared to our gold holdings, and really compared to our reserves in general and everything else. we're at the low end of it, considering we're the largest economy in the world, with other nations like Germany being the second largest of gold holder of gold. But China is quickly catching up, and other nations as well too, but China especially. And we really don't know how much gold they have. There's a lot of gold probably sitting in China that they don't want us to know about. Remember, they think very long term. And long term, where they're holding, collecting quietly behind the scenes, and then boom, all of a sudden they come out with all these gold holdings and they're ahead of the United States. Then what would we do? My guess is we would probably wake up then, but by that time, it may be too late. But it's never too late for us to have and hold gold in our portfolio. So very interesting thought exercise and interesting points made by Mr. Costa here. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.